Hey there and welcome to our channel. In today's video, we'll be discussing will 2023 be another terrible year for investors? A deep dive into the economic forecast. We're excited to share our thoughts and insights with you, so let's get started. Welcome to our video on whether 2023 will be another terrible year for investors. After a difficult 2022, many investors are wondering what the future holds and whether they should be preparing for more losses. In this video, we'll take a deep dive into the economic forecast for 2023 and examine some of the factors that could impact the stock market. First, let's talk about the economy. The chief of the IMF, Kristalina Georgieva, has issued a warning that a third of the world's economy is expected to experience a recession in 2023. The Eurozone and Britain are already experiencing a downturn, and a recent survey of economists conducted by the University of Chicago and the Financial Times found that 85% of respondents believe that America will follow. This means that the global economy is likely to face a slowdown in growth and a decline in economic activity, which could have a negative impact on the stock market. However, it's important to remember that markets often look ahead and that worries of a recession have been prevalent for most of 2022. This is already factored into current pricing, so even a slightly improved prognosis could raise stock prices. J.P. Morgan asset management analysts predict that stock prices will actually end 2023 higher than they began due to the strength of consensus that there would be a recession. Goldman Sachs and Deutsche Bank also have optimistic predictions for the stock market. That being said, there are also reasons to believe that suffering will continue. Stock prices are still high by historical standards in relation to their underlying earnings, and both growth and value stocks are susceptible to earnings downgrades that have not yet occurred. This means that even if the economy starts to recover, stock prices may not follow suit if companies are not able to meet their earnings expectations. Additionally, valuations were obtained during a time when central banks used quantitative easing to flood the market with unlimited liquidity. These QE programs are now being reversed and governments will increasingly rely on private investors to hold their debt, which could lower bond prices and increase yields. This could make stocks appear less appealing in comparison to bonds, just like in 2022. Another factor to consider is the difference between economists and investors. Economists often look at fundamentals and historical data, while investors are often driven by emotions and market sentiment. As we've seen in the past, market sentiment can change quickly and unexpectedly, which can lead to unexpected gains or losses. This means that even if the economic forecast is not particularly positive, the stock market can still surprise us. So, will 2023 be another terrible year for investors? It's difficult to say for sure. While the economic forecast is not particularly positive, the stock market has a tendency to surprise us. We are simply using the data that is now accessible to us. If the housing markets crashed or the war in Europe came to an end, things in the markets might change. It's important to stay informed and make decisions based on your own risk tolerance and investment goals. It may also be a good idea to diversify your portfolio and consider alternative investments such as bonds or real estate. Remember to keep in mind that investing is a long-term game and to not make hasty decisions based on short-term market fluctuations. Thanks for watching our video. We hope you enjoyed it and learned something new. If you liked it, please give it a thumbs up and consider subscribing to our channel for more content like this. Don't forget to leave a comment and let us know what you thought. Until next time, take care.